Good morning, guys. Welcome to this Tuesday, December 30th. And 2 more days, guys, 2 more days of this year, and then we're going to be in 2026. So I already mentioned the schedule. The Today and tomorrow's full trading days. Thursday is closed, Friday is a full trading day. So that's how it goes. No, we are just stuck in a holding pattern. It seems like the Santa rally. We had a little bit of a Santa rally going on. It's backed off a little bit this Monday, and we're just kind of sitting here. So looking at we made new highs here right before the weekend, Friday, and then Monday it's just backed off a little bit. We haven't really sold off or retraced a whole lot, but yesterday was started getting me a little bit nervous. It wasn't really that bad, and support held at the 69.35. So a risk-off day would retrace this whole thing and then some, take us all the way down to 6,800 and then some. So it's just kind of in a holding pattern going into the end of the year. It's a fair amount of choppiness. It hasn't been that crazy choppy where it swings back and forth in the same bar, but it has been nice runs. But you only get that one run, so you're watching the ES, it takes off and starts running in a second non-stop buying for like a good for 3-4 minutes, and then it stops, and then you don't get to that follow through you're looking for. So if you don't get on that early train, you kind of miss it out. But I wouldn't be chasing it unless you manage to get on an early run like that. I wouldn't be chasing it, just get caught at the end of the run. That's usually what happens there. So news this morning, though, before I keep going. We have nothing at 8:30. We get 9 o'clock. We get housing data, case children, FHFA. In 9:45, we get Chicago PMI, and that's it. Fed minutes at 2. That could be something. The Fed minutes at 2 o'clock today, Eastern. So 9:45 and 2 p.m. is where we have news coming out. Other than that, I would look for more of the same. Yeah, a little bit of weakness, a little bit of strength. The market trying to find its way. People doing last minute rebalancing, closing out the year. Of course, a little bit runs up, maybe runs down. And I would just lean against the edges, start off pretty much range bound. I would probably favor the long side still. We are in a move out of the middle to the upside. We did cut off the buying Friday. So yesterday was the first day we didn't extend to the upside. One more day like this. And right now we're kind of looking for a spot to cut off the selling, the regular standard profile development. Move out of the middle at this point to the upside, cutting off the buying at the 69.90s, cutting off the selling at least so far at the 69.35s. And if that holds, we're going to be in stage 3, building value up here going into the new year. So that's kind of how we get started. So range bound trading, looking for early weakness to see if we're going to extend further to the downside, or if this is going to be the low going into that stage 3. But I'm still looking to buy against that weakness. So it's for at this point against the 69.45s, 69.35s, 69.20s, 69.10, 69.00s. Takes us down to these levels we talked about before, 69, 15 to 20. That is that 4-letter edge. 69, 69.90 takes us takes a little bit too low. So these levels here, 69.20, 69.10, 69.10 is right there. So I would pay attention to these levels here, right there. This 4-letter edge, this little area, and that 2-letter edge DE here on the way up. If they take out that area, I would be thinking that we may see further retracement back into this volume area. We're seeing around 68.50. But right now, as long as they hold above that 69.10 to 20, I would be staying on the long side of this, looking for rotations higher. On the way up, I would look to sell strength. At this point, it can maybe not super aggressively, but if we can't extend, if we get into stage 3, we're just trading this as a range bound range bound market at that point. So at that point, I would be probably a little bit more aggressive. But we've got 2 more days of this year, so and this is low volume holiday type trading. So I would just expect more range bound trading, maybe drifting a little bit lower, maybe drifting a little bit higher. But that's kind of what I'm looking for. Not looking for any risk off kind of selling or anything like that. Starting the new year though, that could be a different story. We'll see if they're going to be some profit taking going into the first part of the year. You know, usually you sell your losers before year end, and you sell the winners you want to take. You take those beginning of next year, because that's where you usually have you can delay the taxes for a year. So that's kind of the I think so there could be some selling, but January is notoriously hard to predict. So I'm not going to go there just yet. We'll talk about that on Friday, what we can expect. Right now, though, we're looking at the buying weakness against that 69.45, 69.35, 69.20, 69.10, 6900s for rotations up. That's kind of the way I would look at it. On the way up, looking for shorts against the 55s, the 70s, the 85s, and 90, 95s here for rotations back down. It could be something right there, and you see that 69.80 level. A little more there. I can mark that up just because we don't forget about it. It's easily forgotten about. You get a little bit cluttered. Did you see that mode from from Friday? And put a small level there, a little tiny one. I don't like to do too many of those. It just gets too cluttered. Hard to make up your mind what level you want to pay attention to if it's moving around on you, or if it gets too crowded. But this one here is just really highlighting that mode from Friday, 69.80. So looking for shorts against that 80, the 85s, up to the 90, 95s here for rotations back down. And that would be consistent when you're running up to the very highs and try to extend. You're probably going to get a little bit of churn going on there. So that's how we get started. I would primarily be range bound. I would favor the long side at least to get started, and see how this whole thing develops. On the NASDAQ has been a lot weaker than the ES. ES is making new highs. NASDAQ is not up there just yet. They backed off pretty good. They extended here past that 4-letter ledge on Friday, and Monday knocked it down, and we are just kind of stuck here right now below it. So not quite making the big go out of it as I thought we would see, but I would start off range bound on the NASDAQ as well. You can argue we have a move out of the middle coming from this lower distribution as well on the NASDAQ. But NASDAQ hasn't really made new highs or anything like that. They're right up here against this upper area of resistance. So I wouldn't look for potential short setups against that level for rotations down. And a lot more aggressively than on the ES. ES is in new territory. The NASDAQ is not. So looking to buy weakness on the NASDAQ, 25, 690s, 650s, 600s for rotations up. They're going to sell strength, 760s, 810 to 20s, 880s up to that 930s for rotations down. Now, I was going back and forth this morning if I'm going to put the ledge right there in the middle. It's getting a little bit crowded as well, and that's all the reason I'm concerned about it. But I can do it anyway. We can just do it. Let's be mindful. It is a little bit crowded on the levels. So I'm looking at this big ledge right there. And that was from Friday. So if I go down and put a little level in there like that in the middle, so that's really leaning in that lower distribution right there. This distribution right here. So it's so I would look for short setups again these levels on the way up. So this and this area is probably better because any of these could potentially hold, but you are up here against a pretty good area of resistance, and that's that 4-letter edge. You had support here on the way up in this first distribution. You came up here, you stalled here for 4 days. You couldn't take it higher before they knocked it down. And we've been up here flirting with it again. Took it out for a little bit, got knocked down again. So they're still defending it. And that's going to be something, you probably count on that still. We don't have, I don't think we have any piece of news before the year end strong enough to really knock us out, knock us higher. So maybe Santa rally, final Santa rally is going to do that. We'll see. So Starting off range bound on the Nasdaq as well. Same story there. Holiday trading. I would watch for this low. They take out that 25,600. I would be more inclined to look for rotations to the downside. But I would look to buy against that 690, 650 down to the 600 to 620s for rotations up. Look for short setups against that 760s, 800s, 810s, 850, 880, and 930s for rotations back down again. And that's kind of a get started. Above this, they start taking out that 880 and the 930s, these two resistance areas. I would be a lot more inclined to hop on the long side and look for maybe a charge to the highs. But I don't see it before year end. So far, the Santa rally was a few days there, light volume trading before Christmas, but it looks like it kind of ran out of gas. So we'll see. Finally, bonds, a little quick one on the bond market, since I'm trying to trade that now. Let me see where, come on, where are you? There you are. Okay. The bond market, I've been tempted to put on a long trade here this morning. I've been watching it, but this is pre-market stuff, so it's not as solid for me at least. But you can see here, this is exactly kind of setup I'm looking for right there. 3, 4, 5, 6 bars just absolutely stalled at 15, 16. They took it lower, big move to the downside, right down into support, stalled, nothing. So this is where you get long for a move down. Now on this guy, 16 up to 20, I would have been at break even. I would have been stopped out at break even right now. That's the setup. So I have a 4 tick stop, go to break even at 4 ticks. So when it traded at the 20s, I would have been at break even and I would have been stopped out now. So when this rotation down came, unless I took profit up here, which is marginal. This happened pretty quick. It's hard to, you would probably sit and expect a bit more of a retracement and probably get stopped out on that trade. But anyway, so that's a great example of a setup. I mean, it could still hold, but down here again to the 16s and the pre-market stuff. I'm usually a little bit less aggressive on them. I like to trade a day session, and if I see something like this in a day session, I'll click in an order, a buy order right there at the 16, and see if I can get filled. No reason to try to be more aggressive. Every tick counts on the bond, so you want to be less aggressive on it. And if they do run it lower for more than 4 ticks, then you're flat out wrong on it. They should be out of that trade. And the few times you get low tick to high tick, they just have to kind of bite your lip and and take it. But the bond market, range bound, still range bound, very much so. But so looking to sell strength at this point against the 15, 20, 425s, the 30s, up to the 1602s. We're going to buy weakness against the 12s. Sorry, it's 15, 16, 12s, and the 1508s for rotations back out. So that's pretty much still in the range. But the fact that they ran it lower like that, that's a pretty strong move right there. It's like an institutional move when they move it down like that. And then you can see that when they reprice the bond right down there to 16, then stop. So, but that's why it makes it good to trade. So right now we have, as you can see on the reversal chart, we have a retest failure setting up at 16. It could still hold. It could still be very much a valid long trade there. And that's going to be a little bit less aggressive. Bond market opens right now in about a minute or so. So we'll see where they're going to go from there. This could be a beautiful setup. If just going into the session like that, I'm going to. This whole move here got me a little bit concerned, so I'm just going to watch it for a little bit. If I miss a trade there, I'll be fine with it. But anyway, so range bound trading on the bonds. I will just highlight this is a great setup right there. If it was after the day session open, I would be looking probably to take that. And if it works out, I may actually start considering those before the open as well. I haven't traded a lot. I haven't traded a bond a lot pre-market. It's usually pretty dead. So this move pre-market was a little bit caught my eye, you know. Anyway, back to the ES. So we got the bonds range bound, ES Nasdaq pretty much range bound. I would favor the long side on the ES right now to get started. I would probably favor the long side on the Nasdaq as well, given that we may have a Santa rally going still. But unless this starts showing some real strength here, I mean, we're probably going to be churning here going into the end of the year. All right, guys, we'll wrap it there. So good trading. We'll see you back at 11:30 for the next update. And remember, light trading, expect some churn, some volatility when you have the last minute rebalancing going on. All right, guys, later.